On a recent episode of Friends Talk Financial Planning, we discussed how a donor-advised fund can supercharge your charitable giving. On today's episode, we'll dig deeper into some of the lesser-known advantages of a donor-advised fund and how it can really be a Swiss Army knife in your charitable backpack. Hi, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan-Mermel. I've got a fee-only financial planning practice in Chicago, Illinois. Before we talk about more donor advised funds, please subscribe. It helps us with YouTube. So, John, let's take out the Swiss Army knife and start using it. First, I would say the first main way that the more advanced donor advised fund strategy is called bunching. So this you do because you want to itemize. So why don't you tell me about what you've seen with that?
Yeah, sounds good. But before we jump in, I just wanted to remind folks, that the episode we did before, the basics, sort of the core of doing a donor advised fund is, listen, I want to control the timing of my tax deductions, right? I've got high income this year, but I won't next year. And I want to give appreciated stock investments that have gone up. Those are sort of the two basics. Then we get into some of the little more complicated things that still can provide a lot of value. And sort of at its core, if I'm giving to charity already, but I usually end up taking the standard deduction because it is much higher these days than it had been in the past. And yeah, I give to charity, technically it's tax deductible, but it never shows up on my tax return because the standard deduction right now is just so high. I might look and say, listen, I might take 2 or 3 years of charitable donations and put them all into 1 year so I get above the standard deduction. Then I get a higher deduction this year, and then I'll take the standard next year and the year after and the year after before I kind of group my deductions into 1 year and sort of lump them together in one place. But so that's the place where we see it is, we're giving, but geez, we're not getting any bang for the buck on the tax side of things, or we're getting a very little bang for the buck because the standard deduction already gives us so much benefit, is trying to sort of plan around that, if you will.
Right. And so you could do this with just contributing cash to your donor advised fund. So I had one client that they just saved it up and they took it out of their emergency fund and then replenished their emergency fund as time went along with not making these donations, or donation part of the budget went on. And it was decent. They donated a decent amount of money. So that was part of it. It wasn't like they were doing $1,000 donations, because that, for most people, bunching, if you're not a big donor, I don't see it that much. I'm not sure that
probably you need to be doing several $1,000s a year or more, right? I mean, again, your circumstances might differ. I'll tell you the other place. So, grouping those deductions can make a big difference. The other place that I see a lot of folks using a donor advised fund, separate from the timing and the appreciated investments thing, is having control over my investments into the future. I want to take a tax deduction today. And, if I'm going to give $2,000 to my church every year for the next 10 years, well, shoot, I don't need a donor advised fund. I could just give them $20,000 today and take the same tax deduction. But I don't know who's the pastor going to be in 5 years, or what the future of that charity is going to be. And so I want to take the deduction today, but I want to control, the timing on things. And we talked a little before we hit record is, the Boy Scouts of America is an interesting that they've sort of changed how they approach things. I think they call it just scouting now. And you might think that that's a terrible thing and I don't want to support them anymore. Or you might think it's an awesome thing and now I want to start supporting them. But, it's like the rest of our financial planning, Bridget. Life changes more than it stays the same. And yep, it's great having that tax deduction when I want the tax deduction. But to be able to control where the money goes ultimately to charity is one of the big reasons or places we see people using the donor advised fund.
Yeah. And the other thing is that gets to one of the things that you've actually taught me about giving, is that thinking about it in how do I like what the charity is doing now? Is the charity aligned with my values right now? Is a good way to think about giving. Not think, because I would think every time I donate, the radio station changes their format. And you thought, no, just think about, have I enjoyed the format? Not that they'd switch formats really after I donated. So yeah, think about, do you like what have you done for me lately? Is a better donation than I'm investing that in the future of this organization that they're always going to remain the same. I mean, they might change. So that's fine. What else do you have to say on this one?
Yeah, one of the things that, well, you actually had mentioned this earlier, is we talked last on our previous episode about simplicity. When you just listen, I want to give stock that's gone up or a mutual fund that's gone up, but I don't want to give it to 20 different places. But there's another way of that simplicity, that a donor advised fund can add simplicity to somebody's tax situation, right?
Yeah. So for instance, if I have clients that have no idea what the basis is for their stock, so they bought it, and that's kind of what their basis is, and maybe have paid some taxes on dividends over the years, but they bought it a long time ago. They were, decades
Or
ago.
maybe they were gifted that stock. We've got that. Some dad gave me stock in 1978. What's the basis?
Yeah, companies weren't even required to help you keep the basis until a certain point in time. So, it can be a big task to just figure out, what did I buy this for? And that's what's called the basis. So when you're calculating capital gains, you take the fair market value minus the basis. And so you have no idea what it is. That's a great candidate for a donor advised fund. You don't have to worry about figuring it out. It's a good, you get the deduction of the fair market value, and exactly what the capital gains were are relevant. So
Right, because the charity gets it. In this case, your donor advised fund gets it. They sell it, but charities don't are tax exempt organizations, right? Like, that's the beauty of that, is they can sell. They don't care what the basis is. They sell it. There's no tax deal. If I sell it, I've got to figure out the taxes on that stuff, right?
absolutely.
The other place, I love that one. We've had a number of folks recently, and gifted stock over the years. I got stock as a gift, and golly, what's my basis 30 years later? I can't remember where I left my car keys yesterday, much less what the basis of my stock is. And again, if it's $1 million, well, geez, I'm probably not giving that all to charity. I better figure out that basis. If it's a smaller number, I go, geez, I'm giving money to United Way anyway. Why don't I give it all in 1 year, and I can avoid this basis issue? Really elegant solution to a complicated problem. The other place that we'll see sometimes folks using a donor advised fund has nothing to do with tax timing, has nothing to do with giving investments that have gone up, but just from a record keeping standpoint. When if you're itemizing your deductions and you're giving money to charity every year, you've got to keep track of each of those charities that you gave money to. We've got a client, and they keep great records, and it can be 2 sides of a piece of paper, sometimes more, of charities that they've given money to. And their approach is not giving, larger sums to one. It's $100 here and $200 there. And there might be 40 different charities that they gave to spread their money around. I mean, that's a bear of record keeping to deal with that tax time. By using a donor advised fund, they just write a check to the donor advised fund. And remember, the tax deduction is when money goes into the donor advised fund. That is technically the charity. So I've got one check for $10,000 or $5,000 that goes into my charitable donor advised fund. That's the tax deduction. That's the one record I need to keep. Now the money is in there. I give out $100 here and $200 there. That money goes to those charities that they want it to go to, but there's no record keeping involved with that. We don't have to deal with all that stuff. So just if somebody gives to a lot of different charities, a donor advised fund can be a great way to control. The taxable donation is just one thing to keep track of from a record keeping standpoint, rather than 30 things to keep track of.
That makes total sense to me. Another thing I want to talk about is the ability to actually make ourselves feel better. So one of the things with charitable donations is that donating money, even if it's small, makes us feel good. So with a donor advised fund, at least from your experience, I don't have research to back this one up, but from your experience and from my experience with my clients, it seems like when people donate to the fund, they feel good, whether it's appreciated stock or whether it's cash. And then when they actually donate the money, they feel good. So actually double dipping on that. A third way you could do it is that when you have a donor advised fund, it's as easy as checking a box to say you want to give anonymously. Giving anonymously, again, is associated with higher benefit, not getting credit, not more warm glow, if it's a technical term for it. So that's another thing that's easy with donor advised funds, versus it's more difficult to give anonymously. I would say when you're writing a check, they know who you are,
Right. I'll tell you a couple other things before we wrap up here. One of the things that we do with our donor advised fund is we include our kids in some of the decisions about, well, who should we give money to? Because it's charitable giving is important to us and supporting our community. And so, my sons get a chance to do a little bit of research and make suggestions, and we're hoping to instill that sort of sense of value that's valuable for me into them. And when my wife and I are gone, the beneficiaries of this account, if you will, there's some other technical term for it, but basically the kids get to continue to make donations and dictate where that money goes to. So, right. So giving some of that, instilling values in them is one of the reasons why we use it. And then the other place I just wanted to point out to folks that sometimes, those people ask, well, what if, my brother's in the MS race, and can I use my donor advised fund to support that cause? And how does that work? And I've got two answers to that. One is, geez, if it's 20 or 50 bucks, what are we really talking about? Is it worth the time and effort if that's, useful for you? So a lot of times, personally, I'll just write a check and not worry about the deduction so much. But the other thing is, we've had some charities where it's, especially this time of the year, hey, there's a donor that's going to match your donations. If you send us a check or click on the button or pay by credit card, we get this donation. And I look at it and go, geez, I'd like to support that in a bigger fashion. But I want it to come from my donor advised fund. I'll just get on the phone with the charity or send an email and say, listen, I'd like to give to and be part of this package, but the money's going to come from my donor advised fund. Can I still get credit for as part of the matching? And I've never had anybody say no. I'm sure that people do, but it's like, yep, we'll mark you down as one of the donors for this cause or for that race or for this sort of thing. So sometimes just reaching out, it helps make a connection with the charities too, which is pretty cool.
Cool. So it seems like that's a good place for us to wrap it up. I am Bridget Sullivan-Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. And both Bridget and I are taking on new clients. And so we'd love to hear from you if you're interested in finding an advisor. But Bridget and I are also both members of the Alliance of Comprehensive Planners, a group of nationwide fee-only tax-focused financial advisors that think like we do. And if you like what you hear on our show and would like to talk to an advisor in your local area, check out acplanners.org.
And don't forget to subscribe.